The short answer is yes, there are going to be 10 baggers, 30 baggers in this market.
Hello there, my friends. Chris Marcus here with you for Arcadia Economics. And today I'm quite excited because there's been a lot of fascinating things going on in this gold and silver rally, and especially with the mining stocks. So fortunately, we have the Resource Maven, Gwen Preston, joining me on the show today. First time we've had Gwen on the show, although I've had the pleasure of meeting Gwen at a bunch of the different conferences, and especially in the mining world. I mean, reading about this stuff is good, but when you actually know the people involved, unlike maybe the tech industry, I think that you can really get a lot of edge in what you're doing. So, Gwen, it's great to have you here today. And how are you doing?
I'm doing great. Thank you so much for inviting me on the show today.
Well, it's a pleasure. I've been watching your interviews and seeing some of the different things you point out. And it's also great to have someone who is an expert in these stocks. Although before we even get into that, I'm going to pull up our chart here, recording Tuesday afternoon, and we see silver, let's call it 26.35-ish. What are your thoughts? You have a pretty unique perspective. You write a newsletter, so you talk to a lot of investors. What are your overall opinion of the rally so far?
I mean, I would say the rally before this recent correction in the last 2-3 weeks was bigger and faster than almost anybody would have expected. The thing about precious metals rallies markets, though, is that they get these surges of interest. And that's because of the nature of what I think it's because of the nature of what fuels a precious metals market, which is it's not those of us who love and are interested in precious metals all the time. We don't actually matter. We can profit nicely because we're experts when it happens, but we don't matter. We're not the fuel in the fire. The fuel in the fire is that the macroeconomic setup makes it such that generalists look for something different. They look for diversification. They look for security. And gold and silver are the things that stand up almost always when that kind of looking starts. And so as they look around based on events, whether it's a Fed move or whether it's an economic data point, whether it's a trade negotiation, whatever, whether it's a global pandemic, these things prompt generalist investors to look around. And that look sort of happens, especially because of the way that media is so widespread and everybody focuses on topics so intently. Everybody looks and gets into gold, and then this surge of interest happens, but nothing goes up forever. And so every market has to do 2 steps forward and 1 step back. And so, yeah, that surge that we had in May, June, July was unreal. I mean, those charts were starting to look parabolic, which never works in the long run. And so we've had to have a correction, and that's okay. I laugh when I'm on the phone with anybody who's like, oh, these markets today. And you're like, for real now? Like, context, we're still at a record high gold price. So yep. I'm pretty darn happy. And more than anything, the day-to-day price, I certainly look at the price every day. I'm curious what's happening. But I'm very comfortable in my understanding of the big picture, which is that we are in a precious metals bull market that I think is going to last for quite some time, because I don't see any reason for the drivers of that market to change in the near term. So whether silver or gold is on a down day today or an up day for 3 weeks in a row,
no.
Those things matter, but they don't matter because I'm making investment decisions based on where I think things are going. It's like hockey, right? Look where the puck's going, not where it is right now.
Yep.
And so, yeah, the day-to-day is interesting, sort of almost theoretically in terms of assessing how people respond to data points and what people think is going on with inflation and the details. But the big picture is very solid to me. So that's where I sit.
Yeah, it makes a lot of sense. And I appreciate you mentioning that, because let's say even that we knew 100% gold was going to be at $4,000 in 2 or 3 years, there would still probably be several hundred days where the price is down, even if that happened. And like you said, being able to take a step back from time to time can be pretty helpful.
And the interesting thing is, I mean, obviously we can't know that gold will be at a certain price down the road. But even if we did, I feel like on the days when it's down, you would still have people who were stressed about it, who wanted to know if they should trade that. And I write for subscribers. I try and share my knowledge and my ideas with people who are looking for, that kind of information. And I get a lot of questions about whether people should trade the correction. And my answer is usually, it depends how much time you want to spend staring at a computer screen and how much risk you want to take. Because trading fluctuations is super hard. Trading big picture ideas, well, your big picture idea has to be correct. But if you do the research and put in the time and keep an eye on everything, I think it's more likely to have a correct big picture idea and to trade that than to be able to trade any day-to-day or even week-to-week fluctuations in a moving market.
Yeah, I couldn't agree more, because and I used to be an option trader, which was short-term by nature.
Yeah.
And I don't even really bother. I mean, especially a market where it's traded in paper, someone can dump a big offer of contracts at any point in time. I mean, I'd be flipping coins if I tried to time what's going to happen tomorrow versus, when you look at the long term, which I think we can have a great degree of certainty. In fact, someone asked me, someone to call about silver today. She actually used to work for the Federal Reserve, ironically enough. She was saying, what's the hedge to silver? And I guess to me, the hedge is that, I don't know, maybe there's some way the Fed could ever raise interest rates without destroying the system. And there's some way that the US government could service that debt. Or maybe Donald Trump and Nancy Pelosi and Mitch McConnell are going to get together for a barbecue and they're going to cut Medicaid and Medicare. But outside of that, I mean, that's your hedge. I mean, that's the downside in the long term for the metals when you look at what they're actually doing. How you mentioned the prices were going vertical, but the Fed and the debt are going. I think that's why it makes sense and in the long term.
Absolutely. And I mean, I'm sure we could spend an hour talking about those macro forces, about the debt and the money printing and interest rates and inflation expectations. And we can have that conversation. But my sort of summary of all of that is all of these forces, these are the fundamental forces that drive gold. The most important force that drives gold is real interest rates. They're negative already. I don't see any reason to expect that to change in the foreseeable few years, right? Like, is any central bank in the world going to raise interest rates right now? Not likely, for a whole host of reasons, between supporting a supposed economic recovery and making a ridiculous debt load completely unserviceable. So real interest rates are going to stay negative. That's the situation that we're sitting in. And there's a whole history of patterns for these bull markets and how long they last. And we're really just getting started. What's interesting when you mention charts going vertical, to me, I mean, I love watching gold. I love and silver. I love understanding what's driving the metal prices. I, of course, you mentioned at the beginning, focus more on the stock side of things. So I like finding the stocks that are going to give me leverage to those price moves. And interestingly, the stocks haven't done as much moving. They haven't gained anywhere near as much as you might expect, given how strongly the metals have moved. And again, I think that's just part of the process here. There's two factors. It's part of the process. First, when generalists rotate in, they get the idea, precious metals. And so what are they going to do first when they're buying precious metals? They're going to buy major mining stocks. So you buy the Barricks and the Newmonts and the big guys. And these days, it's so easy to buy precious metal ETFs. So that's the other thing you do. So there's insane inflows to precious metals ETFs. And that's actually a structural change in the market over the last 15 years. You never used to be able to so easily buy paper exposure to the physical metal. So that's added an option for the generalists who are coming in. For better or worse, that just is the situation now. But as the market gets more established, which I think is happening right now, we will still see a good chunk of those generalists remember, oh, right, stocks provide leverage. It's nice to ride gold as it gains whatever percent, 20, 30, 50, 80%. But if I buy a mining stock, that 80% gain creates oodles more free cash flow gains. So that's why we go with miners. Oh yeah, and then there's the explorers who multiply that again. So we're just still early in that process, and we haven't had as much of a move into the stocks yet as we have into the metals. So all these things only build my confidence in the approach that I'm taking, which is to own the stocks, because I'm comfortable in where this market is headed.
Yeah, well, I'm darn glad you mentioned that. And I know a lot of other people listening, because I've gotten plenty of emails, phone calls, especially in Silverland here, where we've had this silver rally. Some people feel, and I would likely agree, that silver, the stocks, ironically, not only have they not yet provided the leverage, I saw something this morning I was stunned by. I think you might be shocked to actually see this. Well, you're pretty sharp, so maybe you've already seen it. But we look back here on June 1st, price of silver is $18.16, okay?
Mm-hmm.
And today we are at, let's call it 26. So over $8 higher between June 1st and today, which is August 25th.
30% gain.
Although on that same time period, here is SilverCrest, and let us go back to June 1st right here. SilverCrest was $9.56 when silver was $18. Now silver is $8 higher. And SilverCrest is, let's see, we'll call that 80 cents lower.
Right.
First Majestic, similar story. I know there's that short position on First Majestic, but I was surprised, and I'm guessing there's probably a bunch of others. So any thoughts on that, and anything you could pass along to the folks watching?
Yeah, I mean, there's some interesting all told, though, that comparison. Two factors, I think there's sort of two sides of the story that you just told. One is that, well, SilverCrest is exploration stocks. So exploration stocks are always going to be more volatile, reflecting both the moves in the precious metal, but also very much reflecting their results. And SilverCrest has had some great results in that time frame, so that in some ways makes it more surprising that their stock is down over that time frame. But the other, whereas First Majestic, obviously a producer, not really exposed to its exploration side. If it makes some phenomenal discovery, then it could get a boost from that. But really, producers are based on cash flow. And so you would expect producers to be less volatile, and yet down despite silver being up. So then what's the other side of the story? The other side of the story is that simply when a market makes dramatic moves up, you should expect, and my take is you should yourself take some money off the table. I'm not saying, I mean, I've just spent a bunch of time saying that I'm very confident that this market is moving higher. But to me, there's a very strong reason to take some money off the table when you get, a 200% gain in a stock. And for me, it's just that my capital is not bottomless. And so if I have a stock that gains 200, 300%, something fantastic like that, I'm going to take some money off the table so that I have it available to rotate into the next opportunity. And that's a big part of how you multiply your money as a precious metals market evolves, is you have to keep rotating it through. If you want to make the most of a market like this, you really have to be on top of the stocks that you own. Not just that they're good fundamental stories, but what they're expected to do when. So are they exploration stocks? If so, are they drilling now? When are those results coming out? If speculation really builds the price ahead of the results, maybe you take some money off before the numbers even come out. Or are they about to put out a mine plan for their new discovery, a PEA? You can often get a big speculative run up before that. So being aware of major news events when they're coming and then sort of trading in advance of them or as a result of them gives me the ability to take gains and put them back into a stock that hasn't started that speculative move yet. So when a market moves up dramatically, which gold and silver absolutely did in May, June, July, like you just showed, sure, the stocks didn't all carry the torch all the way through the way that the metals did, but I think a big part of that is just profit taking. And you kind of can't fault precious metals investors after they went through such a heinous bear market for a lot of years. That we're trying to this is our opportunity to take money off the table, and put it back into new opportunities. So I think that does play a significant role. As the market strengthens and more generalist money comes in, those impacts on the equities will be less, because they generalists who come in are going to trade the news events a little bit less, and so I think the stocks won't be more volatile on the downside than the metals are, but we're still, again, early in this market, and so that's what we're seeing.
Yeah, and I think you nailed it there. Where do you feel like a lot of people are still have that memory of 2016, or like, is this another spike and silver is going to be back down? I get that feeling from some of the folks I talk to. Do you think there's a lot of that going on?
I do. And I think you and I were chatting briefly before we started this interview. One of the things that steps out to me is that it's easy. So my job is to explain what I think and why I think it. So I'm actually forced on a daily basis to reckon with my broad investment outlook. So I have to sort of understand why I think gold and silver are moving, how long I think that's going to continue. Executives of junior mining companies, for example, whether it's a producer or whether it's an explorer, they have a lot of other things that they need to do on a daily basis, from drilling to permitting to social relations to investor marketing and all of that. So it's harder for them to spend dedicated time understanding the gold and silver markets. And so I will get on the phone with executives from these smaller companies. And, if gold or silver are having 3 down days in a row, I definitely get that reaction from some of them, that they're a little worried that this is all stepping back. And I think it's just because, like I say, they don't have the time or luxury maybe to sit back and really think about the markets all the time. But when you do, then you get the context that gives you the confidence. So that context exists. It will slowly build into people, right? They will, as time heals, time helps. As this market progresses, I think that will become, everybody will just gain in confidence. So I think it's still evolving, but certainly there's a lot of people who have that worry just lingering because it was a tough period of time leading up to this.
Yeah, and I think that's the fun part about investing, because it's all right, we can sit here and talk about silver undervalued, but for the price to rise, when do other people realize that? So there is that psychology element, and we'll mention in a moment at the Resource Maven, where you help people guide through these choppy at times waters. Although one question that if you care to comment on, I'd actually love to know, I bet a bunch of others, what is at least a beginning framework? A lot of the time we'll see silver up $1 or $2, and usually people who have, shares or options on miners, the miners haven't gone up enough, whatever that is. But how would you value? So let's say if you want to pick a particular stock name, or it doesn't even matter, but what is a way of looking at how much should this stock move? How do people begin to at least walk through those calculations for themselves?
It's a great question with a very long answer. But to simplify it, first of all, it really depends what stage of company you're talking about. So explorers, it's a very different math than those who have an asset, a discovery that they're growing. And that's a very different math than those who are already planning a mine around a discovery. And that's a different math than those who are producing from those discoveries. And all of those segments, not only does the math differ in terms of how do we figure out what it should be worth, but the risk level differs dramatically as well. Certainly a pre-discovery explorer is the highest risk bet you can make, whereas a producer is the lowest risk bet outside of royalty companies and whatnot. So obviously there's a big risk spectrum there. As an addendum to that, you can think about it in terms of how much risk you want to take on, or you can think about it in terms of how much time you want to spend paying attention, because high risk means you need to pay attention because a single news release can change the story dramatically. Low risk means you probably don't need to pay attention very much. If you believe in a growing gold market and you invest in a mid-tier or major gold miner, You can probably walk away for weeks at a time and not pay any attention to what your stock is doing if you're confident in your overall thesis. So that's sort of my premise, is really think about how much time you want to spend tracking this market and your stocks, and that'll help you decide where on that spectrum you can sit. As for how to actually value them, that's tough these days. I mean, I spend a lot of my time on the smaller end of the spectrum, so pre-discovery or early discovery exploration stocks, and you can have dramatically different valuations, market caps for stocks that are seemingly pretty similar. So there's no straight answer there. It's actually quite a complicated answer that's not factual. It has more to do with people and jurisdiction and marketing and the ability for the story, how well the story is being sold, and of course the actual geologic potential, which you would also hope matters. On the more developed end of the spectrum, the easiest thing to do there is to use any sort of investment bank puts out notes, and they'll give you, in their universe of developers or producers, they'll give you what is the average valuation. So are we talking about, valuation based on cash flow? Are we based on enterprise value? We're talking about valuation based on defined ounces in the ground. These things are all still imperfect very much, because ounces in the ground are worth very different amounts depending on how the deposit's shaped and where it sits and how it's going to be mined and all of those things. But that's your starting point, is valuation per ounce in the ground, and you'll have companies that are trading below that, and you'll have companies that are trading above that, and that depends again on people and marketing and jurisdiction and all of those things. But that's your starting point for valuation. And then I think you have to take that and put it in the context of, where do you think this stock's going? Is the company, take a development story. Is this company actually working on building this mine? And if so, how long is that going to take? What are the hurdles that they have to get over? Is the market going to stay strong over the time frame that's required? Or do we think this stock's going to get taken out, right? Like, is this actually a stock that is a deposit that's exciting, and so the time frame to building the mine isn't actually pertinent? What matters is, when do you think this thing's going to get taken out, and how much value can the team add to the asset before that happens? So sorry, that wasn't I don't know if that was a very helpful answer, because it didn't give you easy calculations to do, but that's the nature of this business.
Well, I mean, and it's not a simple question, but even as you were saying it, it gave me a lot of things to look at, where, then you factor in the management team. Do they know what they're doing? But I think, like you said, starting with some valuation of ounces in the ground, and then factoring all these things. I would say, if people even go through the exercise of thinking about those things, they're probably closer to the real answer than 99% of everybody else who's trading. Gwen, last one for you today. I think this could be fun. We hear guys like Doug Casey, Eric Sprott, others talk about how in the past rallies, some of the stocks were 10 baggers or 30 baggers. I don't have my book handy today, but in Crisis Investing, Doug mentioned that between 1962 and 1968, silver doubled from $1.09 to $2.50-ish. He said the average silver penny stock went up. The average was 150x, not percent. So my question to you today is of course, how much are all these stocks going to go up? No, but do you think we will see on this rally, will we see 10 baggers, 30 baggers, things like that? And maybe an add-on to that, for folks who do believe we will see silver go above $50, whether you want to name any individual names, or just even the characteristics of what types of stocks it would be that would really have big moves in that environment.
Absolutely. So the short answer is yes, there are going to be 10 baggers, 30 baggers in this market, for sure. And I mean, the fact that you can we've seen that already with some stocks, even before this really, really good part of the gold market started. I mean, Great Bear Resources is the sort of obvious example right now, but SilverCrest is another great example. Both of those companies discovered standout deposits like really, really good deposits. They discovered them in an only sideways market, and yet they're already multi-bag. Like they've already given, I mean, Silvercrest is easily a 10 bagger. Great Bear is like a 18 bagger or something from its starting point. So yes, if they can do that in a reasonable market, then the opportunity in a good market is actually an order of magnitude more. So it's, I mean, I don't think the average silver stock is going to go up 150 fold like happened in the 60s, but we're not even close to the stage of the market yet where a rising tide lifts all boats. That stage will come. Right now, we're still at the stage where you can do well in most stocks, but you can do, you know, well enough that you actually want to talk about it to your friends in stocks if you do some selecting. And then if you rotate your capital from one to the next, because we're still in a bit of a picker's market. And as this market evolves, you won't even have to be as good as you are now. You'll be able to just buy something with silver in the name. At the end of the day, everybody talked about how Warren Buffett put money into Barrick, right? He put $500 million into Barrick, and that represents 1.2% of Barrick's shares, right? And so that's a big move, except that it represented 0.1% of Berkshire Hathaway. That's a good capture of how much generalist money there is out there and how little of it needs to rotate to gold to have a ridiculously outsized effect, because our market is miniature. The gold market is absolutely tiny. So if generalists start trying to shove dollars in this door, the door is really small. And so that's why you get these multi-bagger opportunities. And I really think that that's the market that we're looking at.
And if Warren's still hungry, he's still got a little space in that shopping cart. So if he wheels over to the silver junior minor aisle and says, I'll take some of those and that one there. And it's actually interesting. Warren Buffett has twice amassed a large physical silver position. And, you know, obviously I'm still figuring out why he bought a company that produces doorstopper, useless, barbarous relics. But if he's buying gold, despite he pulls that Ben Bernanke, like, I don't know, but, you know, and then you look at his father, Howard Buffett, who was like, I mean, if you ever heard any of the interviews with him, he sounds like the Ron Paul of his day. So I think that's the thing. You know, I don't pretend to have any genius analysis. I mean, silver and gold speak for themselves. And then I'm quite fortunate to have great guests like you join me on the show for all of the intricacies of the mining world. And perhaps, Gwen, you could just let folks know the website, how they can find you, some of the things you offer. So I think a lot of people are getting really excited, and I appreciate, I mean, you have great insight, but also know how to explain things in a way people can actually understand, which I find is very important. So how can they find you?
Thanks, Chris. I love explaining things. Maybe I should have been a teacher at some point, but I do love explaining things.
Mining stock teacher. That's going to be a hot demand.
Right?
Starting.
So my website is resourcemaven.ca, and I write a series of, that's it. I write a series of newsletters. I write one that's a monthly newsletter that's designed for those who don't have a lot of knowledge base in the precious metals sector. So it tries to explain what's going on, why it's going on at a fairly high level, and gives low risk investment ideas. Everything that I write about is what I'm doing with my own money. So the investment ideas are the moves that I'm making at the low risk end of my portfolio. Then my flagship letter is a weekly newsletter that is about the rest of my portfolio. So it's pre-discovery explorers all the way through to single asset operators. And then I have a premium service for those who are interested in participating in financings. When I participate in one, I try my best to secure a large enough allocation that people can participate alongside. And that's those are my offerings. But at the end of the day, if you're interested, certainly come to my website. You can sign up for a free trial and you can get an idea of what I have to offer.
Yeah, and do we have any Maven conferences? I hadn't seen that before.
So I have I participate in a fair number of conferences. The Maven conferences were something that I had just started related to my premium service. So for those who are interested in participating in financings for junior explorers. I had done a few conferences that are just financing opportunities. So they're all companies that are currently raising money, and they're financings that I'm participating in. And so I got a few of them together to present at those events. But otherwise, these days, I'm doing all of my events like everyone else online. So I participate in the Metals Investor Forum fairly regularly and a few other events like that.
Well, I appreciate all that you're doing, the knowledge you're sharing. Hopefully we'll even maybe get you to make an appearance at SilverFest in a couple of weeks. Big silver party. We'll be talking silver stocks. And Gwen, again, I appreciate you joining me here and really sharing some great insight that I think people will find helpful. And we'll have to do this again soon.
Absolutely. Thanks so much.